A trader on Reddit came out of nowhere and dropped a bombshell. He claimed to have made $300,000 last year using a simple day trading strategy. His post went viral, racking up thousands of upvotes and sparking a huge discussion with hundreds of Redditors. Some hailed him as a genius, others flat out called him a liar. But is his strategy actually legit? Or is he just another dream seller spouting nonsense? I had to know the truth, so I took his exact strategy and tested it to see who was right. The results? Well, let's just say they might surprise you or completely destroy your trust in Reddit trading advice. Let's take a look together. Okay, we'll start by dissecting this trading strategy. Here is what the Redditor claims he did. He uses only two indicators, a simple moving average of 10 periods and the MACD. He enters a position when the price crosses the moving average, and the MACD confirms this move with a crossover between the MACD and its signal line. He says the strategy works on any time frame as long as it's used on liquid assets. He personally uses it mainly on a 5-minute chart intraday. And lastly, he exits his trades gradually, taking profits at 1%, 2%, and 3%, while also moving his stop loss as the trade progresses. Sounds pretty simple, right? But there's something interesting here. First off, this was the very first post from this person on Reddit. No post history, no discussions, just this one message proudly showing his results. Is that suspicious? Well, maybe. Second, many users pointed out that the strategy appears to generate a lot of false signals, something not addressed on his screenshots. So clearly, that's not ideal. As a result, two distinct camps formed in the comments. Camp number 1 saying, "Dude, you're a genius, teach me your method." And camp number 2 saying, "No way this works, that's total nonsense." So what do you do when the internet can't agree? You run an experiment and see by yourself. So we'll backtest the Reddit trader strategy on the Obside platform. I'll start by creating a trading strategy, and he says his strategy works well on liquid assets. He gives, for example, the Coinbase stock, the Amazon stock, and the Meta stock, as well as the Nasdaq. So I'll start by backtesting it on the Coinbase stock. And here, for the strategy rules, I'll literally copy-paste what he wrote on his Reddit post. So for his day trading strategy, that's this passage right here, where he explained how it works. So copy and paste. I'll just tweak a few rules based on the clarifications he added on the comments section. For example, here he wrote a 10-day SMA, though he operates on a 5-minute chart. This was clearly a mistake from his end. He meant a 10-period moving average, and a lot of people attacked him about that, saying that it's not possible to use a 10-day moving average on a 5-minute chart as it would remain flat almost all the time. But that could simply be lack of attention from him. It could be an honest mistake when he wrote the post, but he clarified in the comment section that he actually meant a 10-period moving average. So I just fixed that here in the prompt. I'll also bring some clarification about this sentence right there. He explained in the comment section that basically he scales out of his trades by exiting 50% of the position when profits are at plus 1%, then another 25% of the position when profits reach 2%, and the final 25% of the position when profits reach 3%. So I'll just rewrite this sentence in the way he meant it. So we'll say scale out 50% of the position when profits reach 1%, and we will call that TP1. We'll say and another 25% of the position when profits reach 2%, and we will call that TP2. And another 25% of the position when profits reach 3%, and we will call that TP3. Now you might be wondering why there is no stop loss in the rules of his strategy. Well, actually there is, and he brought it up later in the comments. What he does is he places a stop loss either at the low of today's candle or at the low of yesterday's candle. And he moves that stop loss to break even when TP1 is reached. So we'll just write it like that. We'll say place a stop loss at the low or high of yesterday's candle. A high because if it's a short position, then we will use the high of the candle of the day of the previous day. And we will say bring the stop loss to break even when TP1 is reached. Okay, so here we've got the complete strategy of this Redditor. So we'll backtest it over the last 3 years, and we'll use a starting capital of $5,000, and we will risk 1% of our capital if the stop loss is hit. So there will be a dynamic position size calculation to always risk the same amount, 1% of our capital. And we will allow only one trade at once. And I almost forgot, since this is a day trading strategy, he closes his positions at the end of the day and don't let it open overnight. So I'll say close any open trade at the end of each day. So now it's ready. So I'll just click next, and the strategy is now ready for the backtest. So here we go. So this should take around 30 to 60 seconds, and then we'll get the complete results. Basically here, Obside's AI is turning the rules I wrote into a trading algorithm, and it's going to backtest it to see how the strategy has performed. Okay, that's finished. The strategy is ready. Let's see what we got. Here I can control whether the AI clearly understood the rules I wrote. This allows me to check if it did its work properly. So let's check it and see the results. Okay, so here we've got the results of the strategy over the last 3 years. And the first thing we can notice is the equity curve over the last 3 years. That's not really pretty. It's basically going downwards most of the time. We have a few bounces there and there, but overall, this typically looks like it doesn't have an edge. Sure, the strategy wins more than half of its trade with a win rate of 53%, but the risk-reward ratio is just not that good for such a win rate. Therefore, we've got a negative expectancy, which means that the strategy is going to lose money over time, which it clearly does based on the capital evolution. And the thing is, our sample size is pretty big with over 1,000 trades there. So if that strategy on the Coinbase stock had an edge, it should have materialized by now. So for now, it's very hard to take his strategy for granted and believe that it's actually a good one. And this seems to match what some Redditors said in the comment section, that this kind of strategy generates a lot of false signals, which clearly is what we're having here. But let's give it another chance, because this could be due to the way the Coinbase stock behaved. But the Redditor mentioned that the strategy is supposed to work on liquid assets, such as the Amazon stock, the Meta stock, etc. So we'll test it on the Amazon stock. I'll copy the strategy. I'll just select Amazon as the new stock, and we will backtest it over the last year, basically, because this is the year that interests us, where he claims to have made $300K. And okay, so we'll backtest it over the entire course of the year 2024, from January to December, and hopefully the results will be better. And by the way, now that you understand the rules of the strategy, since you've seen them, let me know down in the comments section whether you believe that this kind of strategy is supposed to work or not. I'm really curious to see what you think, and of course I'll read all of your comments. Okay, the results are here, so let's check them out. Damn, unfortunately it's no better than on the Coinbase stock. The trend is clearly going down with no edge whatsoever. The win rate is fairly low, and the reward to risk ratio is not even 1. That's why the expectancy is truly in the negative. And to be honest, I'm not that surprised here, because yeah, this kind of like moving average crossover and MACD crossover, it's the kind of strategy that intraday will generate a lot of false signals. All right, so should we give it one last chance? Yeah, let's go. I just started a backtest on the S&P 500 index over the year 2024, and hopefully it will do better than on the Coinbase and Amazon stocks. It's ready. Okay, it's slightly better, but that's still not in profitable territory, because as you can see, the edge is so small that it's actually negligible. And this is while trading all the signals that the strategy gives, as explained by the Redditor. And to give you a little feedback on my personal experience coding trading algorithms, I indeed noticed that strategies based on simple crossovers from indicators tend to give a lot of false signals and usually do not have an edge. So that would align with what a lot of Redditors said in the comment sections, that on the screenshots that he showed, he did not actually take into account the potential false signals and only showed the profitable trades. So I'm basically not surprised by the backtest results here. So in summary, we backtested this strategy on the Coinbase stock, the Amazon stock, as well as the S&P 500 cash index. And on all of these backtests, the results were pretty bad. Add to that the other red flags, such as the fact that it was his first ever post, the fact that he was flexing quite hard, and the fact that there is no proof of him filtering bad trades. I don't know, I'm very skeptic here. Maybe he uses discretionary filters that he didn't share, which actually turn his strategy into a profitable ones. But if so, then his posted rules don't always apply, and then his post is not very useful then. He did, though, mention that he also has a long-term strategy that he trades on daily charts. So it's possible that most of his 2024 gains came from that, while the 5-minute trades that he does are just a side hustle. But if we trade his day trading strategy on the 5-minute time frame purely on the rules that he wrote, it doesn't work. So what do you think? What's your take on this strategy, and which camp would you side with? Camp number 1, hailing him as a genius, or camp number 2, which is very skeptic? And if you've watched until here, write down Reddit in the comments section. And I thank you very much, and I'll see you in the next video. Bye.